Yeah, absolutely. Look, what we're seeing is you're seeing that in the stock market and actually in the fundamentals as well. So if you look at the relative performance of semiconductor stocks, all of them actually, not just Nvidia, relative to say software, the software companies are the ones buying these AI chips. So their spending is what's driving the share prices of Nvidia and other companies up. Whereas what revenues are going to generate from this AI software still remains to be a question. And so you've seen a massive divergence between the performance of these stocks. In fact, it's the highest relative performance of semiconductors to software in the last 2 decades.
Yeah, and one worries though that when you reach this height that Nvidia has reached, one worries about when it perhaps will go a little bit lower. Do you think that those bets against it then are pretty much warranted, having seen its meteoric rise?
Yeah, it's a difficult question. I mean, Nvidia is really pushing the pace, right? They've just been at a massive conference. They've announced a new product cycle. They're doing a product cadence of once a year, a new product, which is really, really fast for competitors to keep up. They're trying to cement the ecosystem. I think the fundamentals are very bright. I mean, the stat that really blew my mind is that the forecast cash flow for Nvidia for next year, or for 2026, is higher than Microsoft. And so the fundamentals are keeping up for this stock. But of course, as we know, there's going to be a fight between the bulls and the bears in the market.
Yuri, fascinating conversation so far. Is the product that Nvidia is offering better than the rivals? I had quite a robust debate with Karen yesterday about this. Is it a better product, or actually is it just a product that the buyers have to buy because they're being locked into an ecosystem and don't have any alternatives?
That is a great question. I think there's definitely debate out there. I think the competition is trying to catch up. I think this idea that you're going to invent ASIC chips that are specifically focused on AI, I think we're still early in AI's development. So you need the flexibility of a GPU. So I think those are maybe further ahead and further down the line as competitors. But I think the truth is they have a very, very strong ecosystem, particularly around the software in terms of developing these chips. And I think that's going to be hard for competitors to break.
We can confidently say that no other company in the world has benefited from the AI boom more than Nvidia, the leading player behind the impressive AI GPUs that tech companies buy to power their AI needs. Nvidia stock has soared by more than 200% over the past year, dividing Wall Street analysts. Some say that there's still more room for growth, while others say that Nvidia's amazing run will eventually come to an end. At a time like this, it could be important to look at what Nvidia insiders are doing with the stock, because they definitely know more about the company than any analyst or investor. But Nvidia insiders have actually sold more than $64 million of the stock since May 22nd, the day the company reported its Q1 earnings on. So, what is this wrinkle in Nvidia's otherwise remarkable story? And should investors worry about it? Let's find out in today's video. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Does, again, our debate yesterday evolved. Does having a strong ecosystem make them monopolistic and worthy of an investigation from regulators? Or actually, is it just they were first? Like Apple, they have a very strong ecosystem. It's just an economic reality of being the behemoth in the room rather than actually having any malicious intent or being a monopoly.
Yeah, so we've got actually a fund that focuses on monopolistic businesses.
Right, is it in it?
It's not actually in it, although it potentially could be in it. The problem is in tech, it's very difficult to say something is a monopoly. Things change so fast. I mean, if you think about it, we're 1 year down, roughly 1 year down since ChatGPT burst on the scene. Since then, Nvidia's share price is up 600%. What I'm trying to say here is that things change very, very quickly.
Nvidia shares recently fell around 1% after an insider sold shares in the company. Specifically, Executive Vice President Deborah Sjoquist sold 15,000 shares for a total transaction of $17 million. Also, Director Mark Stevens sold 8,900 shares for a total value of $10 million. The two were followed by the company's CFO, Colette Kress, who sold up to 50,000 shares, and Nvidia's Executive Vice President of Worldwide Field Operations, Ajay Puri, who sold more than 100,000 shares. In addition to them, Nvidia's CEO, Jensen Huang, plans to sell 600,000 shares through the 31st of March of 2025, a transaction worth around $735 million. Of course, this insider selling took its toll on Nvidia stock, but it doesn't mean that there's anything wrong with Nvidia's fundamentals or growth expectations. So, let's get into why the stock's reaction to the selling was an overreaction from the market, and whether investors should capitalize on this opportunity to load up on more Nvidia shares. Hello everyone, and welcome back to Investocracy. Nvidia's Q1 results blew past analyst expectations, with adjusted EPS landing at $6.12 per share on revenue of $26.04 billion. In contrast, Wall Street had anticipated adjusted EPS of $5.59 on sales of $24.65 billion. This didn't really come off as a surprise for most, as high demand for AI-related applications saw major entities buy up Nvidia GPUs. However, there are some concerns about whether Nvidia stock can keep the rally going. Recently, the company acknowledged that just one customer provided a large portion of revenue contributions. Additionally, big tech names buying from Nvidia might eventually seek to reduce their dependence on its chips, which could negatively impact the business. And the news of insiders selling their Nvidia shares added to these concerns. But investors should keep in mind that insiders sell their shares for a number of different reasons, not all of which are negative. For instance, insider selling can happen for tax considerations, or simply because the seller wants to enjoy the fruits of their labor, and this might be the case with Nvidia, as all insider sales were made in compliance with a trading plan that was already set in motion. In fact, the plan that Nvidia insiders adopted is intended to remove any advantage an insider may have from knowledge of material non-public information. Such plans automatically execute stock trades when preset conditions, such as price and volume, are met. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Tom, what if, this market is just screaming out, it's Nvidia's world and we're just living in it, right? I mean, if Nvidia's up, markets are good. Nvidia's not doing much, S&P can't do that much, NASDAQ's negative today. It's a one-stock story.
Nvidia is really a generational story for now because, how many $3 trillion companies actually have doubled, so clearly Nvidia is important, but it's important because it's really one of the most important ways to get exposure to AI. And I think the AI story is, early innings, as many people talk about. It's transformational in terms of productivity, and there's a lot of use cases developing. So as much as it might feel like a one stock market, as you know, there's a lot of stocks up more than 20% year to date, and I actually think breadth is likely to increase. So for investors, there's a lot of opportunities in the second half.
You are steadfastly bullish on the semi names, the leadership, Nvidia, but others as well. Why?
Well, believe it or not, Kelly, this is a pocket of the market I've been bullish on for a number of years. And part of that was the technical picture was just so strong. But the technicals remain extremely strong. In fact, they've improved greatly. And now you have very strong earnings. And obviously, we all know about Nvidia now and the power of their earnings. And so when I take the fundamentals of the earnings power, combine that with the picture of the technicals, it suggests that the semiconductors will continue to be leaders within the tech sector and can continue to go significantly higher. Doesn't mean we don't get periods of a pullback from time to time, but I think people are going to be quite surprised how much higher this segment of the market can go up.
While Nvidia's stock split is certainly exciting, there are other reasons why investors should consider buying the stock. First of all, Nvidia finds itself in such a strong position today because it has been so forward-thinking in the past. For instance, the company began developing its impressive CUDA software way back in 2006, and the software allows developers to program GPUs to do parallel data processing, which is the reason developers have the ability to train AI models in the tens of billions or even hundreds of billions of parameters today. Developers have gotten used not just to Nvidia's chips, but also CUDA, and they probably will be reluctant to learn any other new platform to program other accelerators. That's especially true as companies currently are racing to train models and deploy them as quickly as possible. Therefore, Nvidia has what's known as a network effect with CUDA. The more it has become a standard for developers, the harder it is for competitors to break in. CUDA is a key to Nvidia's strong moat, so investors should keep paying attention to the development of alternatives, like AMD's open-source ROCm software platform and Intel's UXL Foundation, and see whether they make any inroads within the developer community. But even if they do, Nvidia is prepared to fight back. The company announced that it's doubling its pace of innovation and will go from introducing a new chip architecture once every 2 years to once every year. On that note, the company introduced its new Blackwell GPUs 3 months ago, saying that it will boast 2.5 times to 5 times the performance of the prior architecture, depending on how it's used. In fact, when packaging Blackwell into a new 72 superchip cluster with Nvidia's updated networking technology, that cluster can achieve a stunning 30 times better performance over a similarly sized Hopper cluster. But Nvidia isn't stopping there, as the company decided to announce the next architecture after Blackwell, codenamed Rubin, very recently. The company didn't disclose any performance specs around Rubin, but what can be assured is it will offer an even greater leap in performance over Blackwell. Now, Nvidia is currently generating huge profits, providing the company with abundant capital to invest in future technological advances, compared to rivals AMD, Intel, cloud computing companies' internal accelerators, and other startups in the space. Finally, another reason to buy Nvidia is the size of the future AI chip market itself. Nvidia just recorded $22.6 billion in data center revenue in Q1. Of that, $19.4 billion was made up of computing chips, with the other $3.2 billion in networking revenue. Last quarter's results put Nvidia at an $80 billion run rate already. According to Deloitte, the 2027 AI chip market could fall anywhere between a conservative $110 billion to the more aggressive $400 billion recently put forward by AMD CEO Lisa Su. If the AI chip market growth slows to reach just $110 billion by 2027, it would be very bad for Nvidia, given its current valuation. But a $400 billion AI chip market would be more like it, and the more likely outcome. In fact, TSMC recently predicted on its last earnings call that the AI chip market would grow at a 50% annualized growth rate through 2027. Conservatively assuming an $80 billion market this year, that would translate into a $270 billion market in 2027. So we can say that while a stock split may get major headlines, the strength of Nvidia's software moat is more important to the company's long-term story. In addition to that, the company's pace of innovation and the total market size for AI chips are two other factors that investors should study very well, and that's how they'll get to the conclusion that Nvidia stock remains a buy, regardless of the split. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.